So I'm Ofeoritse Daibo with the Economist Corporate Network, and I'm here with Leo Abruzzese, the Global Forecasting Director for the EIU. And we're just here to wrap up our morning's meeting with a few questions on how the euro crisis will impact Asia. So just to ask you just a few questions, I'd like to know how the euro crisis is going to impact trade and investment linkages in Asia.
It's important to remember that the eurozone comprises about 25% of global GDP. We're talking about an area that's $15 or $16 trillion. And if the eurozone were to break up, the impact on Asia would be severe, and we know that because the struggles in the eurozone now, which are well short of a breakup, are already impacting Asia. If you look at China, the slowdown in exports, it's largely, though not entirely, coming from the effects from Europe. So we know that the interlinkages, the trade linkages, the investment linkages between Europe and Asia are very strong. And right now, China's slowdown, though some of it has been induced by the government itself to take some of the heat out of the economy, a good portion of China's slowdown is coming from its inability to sell to some of its formerly good customers in Europe, who are not such good customers right now.
And what do you think the general stimulus response will be in the next 2 years from Asian countries, particularly China?
Well, we've already seen some stimulus response from China already. The central bank has cut interest rates. They are taking steps to make it easier for banks to lend. And we do think they'll begin to take additional measures with lending, with the property market. But critically, this will not be the kind of response that we saw in 2009. At that point, China's government threw every log on the fire that it could find. The economy was stimulated, but it was almost overstimulated. And then the government spent the next year and a half trying to bring inflation down. So the government will stimulate, but look for something milder, something less severe than last time. They want to keep growth above 7.5%, maybe at 8%, but I would not expect anything along the magnitude of what we saw 2 years ago. Just too dangerous.
So you're saying that the government will implement more monetary stimulus plans or fiscal stimulus
Probably
plans?
a bit of both. We're going to do a bit of both. We'll probably see some infrastructure spending. We'll see some lending in the monetary area as well. So I think you'll find the government using sort of fine-tuning measures, sort of rifle shots rather than shotgun measures, which is what they did last time around. And we think it'll be effective. So far you haven't seen it, but I would say over the next 6 months you'll begin to see those Chinese numbers begin to tick up. And that'll be good, by the way, for the global economy. China impacts everyone these days.
Okay. And what do you think the scenarios are for the euro crisis, and how do you think that would impact Asia? Just looking at the worst case scenario or the baseline scenario?
In a worst case scenario, which we don't expect to happen, you could see growth rates for most Asian economies disappear. In other words, most Asian economies, I'll leave China aside for a moment, most Asian economies would contract, just the way they did in 2009. So to put it simply, if the eurozone breaks up, Asia will go into a recession, and a deep recession, no question about it. For China itself, China's economy might not actually contract, but China will probably see its growth drop to something like maybe 3%, which would seem shocking by the standards of China. But if the eurozone collapses, there will be a huge impact, obviously, on Europe and on the United States. And think about it. How would China fare when its two biggest markets are both beneath the water, which they would be in that case? So in a worst case, even China will have probably, if it happened, and we don't think it will, but China would have probably the worst year that it had in 30 years.
But in the best case scenario?
In the best case scenario, which believe it or not is probably what we're seeing right now, even though it doesn't seem like a best case, you're probably going to see growth rates in Asia and China come down a percentage point or two from where they would normally. I think China would probably be happier with growth of about 8%, and instead they're getting something more in the 7s. So already you're seeing some of the impact. Same with most other Asian economies. Look at Korea, look at Taiwan, look at Malaysia, look at manufacturing, look at industrial production. In all of these countries, it's come down. It's not contracting, it's not doing horribly, but if you plot any of these manufacturing sectors in any of these countries, looks like this.
Mhm.
They were here 10 months ago, and they've been coming down. They're in positive territory, but just barely. And why? Mostly Europe, and then Europe infects China, and then China buys less from those countries as well. So it starts with Europe, and it flows through the system.
Okay, so just final question. Just coming back to manufacturing, what do you think how do you think China's demographics in the next 5 years will impact manufacturing?
Well, probably to the extent that China is already beginning to have labor issues.
Mm-hmm.
As I think most people know, even though China has a very large population, China's labor force is actually now about to start shrinking. So in other words, China will have fewer workers over time. And already you're beginning to see that factor and the increasing sophistication of the economy mean that people cannot find all the workers they need. Wages are rising very rapidly in China. It's great if you're a worker, but from a standpoint of competitiveness, China is not as competitive as it used to be. So China is still a manufacturing powerhouse. It will be. That won't change. But there's no question you're seeing foreign manufacturers look for other places to locate their operations. You're seeing companies like Nike, the shoe company, decide that perhaps Vietnam is a better location than China. So China is not going anywhere, needless to say, but China as the first, best, only, and cheapest answer for manufacturing will be certainly less the case in the future, and some other locations are looking perhaps a bit more attractive.
Okay, thank you. Thank you, Leo, for your time.